Welcome to the 2022 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Thursday, April the 14th, 2022 edition. Please be sure to hit that subscribe button for the latest financial news in America and sometimes beyond America. And also, I want to announce tomorrow is this big day. Tomorrow is the premiere of the face-to-face question and answer interview with me, yours truly. It begins at Eastern Time. It begins at 7 p.m. Eastern Time on YouTube Live exclusively. Please be sure to add that to your calendar. It will be a face-to-face question and answer session on financial news, anything you want to talk about, hyperinflation, food prices, food shortages, the economy, planning, prepping, you name it. Once again, that's going to be tomorrow, Friday at Eastern Time. It's going to be on this side. It's going to be at starting at 8 p.m. So mark your calendars. I put a posting on the community post page here for our channel, and that'd be a great time to meet you guys. And I thank you for your support. And today we're going to be talking about a couple of things. We're going to be talking about the survey of Americans, the continued hyperinflation that we're going to be seeing, gas prices, and also the bird flu thing which is affecting the eggs, food, and things of that nature too. So let's get right into it, guys. For today, um, we have according to CNBC.com, yesterday it was saying that the White House expects inflation to be extraordinary elevated, according to the new report. The Consumer Price Index, CPI, of course, is one of their favorite ways to measure inflation. It was due out, the inflation was out, and they're saying it right now. Official inflation, is at 8.5%. The benchmark index rose 7.9% over the last 12 months, according to the highest since '82, which is 40 years ago or so. And it's going to continue to rise. Experts and pundits say they expect a recession for the United States to come in the summer of 2023. They're planning it out because of the yield curve inversion, the 2 and 10-year bond yields, and all that kind of stuff. They're planning out, the experts are saying that the recession they believe is coming in 2023 summer. I think it's coming much sooner than that. I would say in winter, 2020, this coming year, winter 2022, we're going to already be in the recession. As a matter of fact, a double dip recession. Yeah, even I say a depression by headline standards. And one of the reasons for that is because, the gasoline prices will continue to hit their high. I know in many parts of the country, you guys have been telling me that it's been dipping about 10 cents or so, maybe 9, 10 cents, and has eased up, but it's still elevated above 4.11 a gallon, according to AAA, for a gallon of regular gas, let alone premium. So with that in mind, 25% of Americans felt financially stressed all the time last year. They didn't get a break, according to CBC and the Acorns Invest survey. So I think the number is much higher than that. I think it's about half, 50% of Americans feel financially stressed. And it's not so much that we don't know what's coming. A lot of you guys know and have been prepping this year and for years in the past, is that there's just so much going on between the health crisis, the food shortages and supply shortages, chain shortages, the rising prices, and the paychecks have not been rising in all levels. So the lower class, middle class, upper class, you name it. The paychecks or the earnings have not been rising because there's only so much money to go around in the money supply. There's only so much money to be made, even for the super uber 1% elite people. There's only so much interest money that they can be gained on and all of the money that they have in the banks and all these other places, and things of that nature. So this has a worldwide effect on this economy. And so, with that in mind, 33% said that they felt rarely or never felt stressed in the last year. The main cause of financial stress has been rising prices, as I've stated before, and this is also so. But also, I think it's the stress of having to carry other family members. We never talk about the multi-generational households. Let me know if you've seen that in your communities. I've seen that a lot in my communities in the South, and the Northeast, and the Midwest, where you have grandmas and grandpas, baby boomers staying together with millennials and the Gen Xers, and everybody's mixed together. You look in the driveway, you see 4, 5, 6 cars in the driveway. People are living together. That can add a stress of having to take care of someone, that may be elderly, or medically challenged, or mentally challenged. So that also is adding a stress on household incomes. It's not talked about a lot in the news and in other places as well. So we know now an average annual salary of $100,000 before taxes is not the same as it was back in 1990 or even 2000, 2001. It takes much more dollars, many more dollars now to live, and the taxes are increasing. Everything is increasing. The insurance premiums are increasing that employers have to pay, small businesses have to pay, and this is choking out a lot of the people in not only the job market, whether they're part-time, full-time, self-employed, etc. But this is choking out a lot of the dollars that's available for infrastructure building, rebuilding the infrastructure in a lot of these inner cities, a lot of these inner cities that have plighted with crime, from Baltimore to Detroit to Philly to LA to Chicago. It's choking out a lot of monies that the cities, counties, and municipalities need to repair the roads, to repair the schools, to repair the different infrastructure needs. And so the U.S. jobless claims, according to MarketWatch.com, rise after hitting a 54-year low in prior week. So we go from hitting an all-time low, which is, now remember, this low is relatively speaking. We know that we only have about 130 million working people in America right now, as far as the official Bureau of Labor Statistics. So that means that we have at least still 20 to 25 million people that's unemployed or looking for work. Claims are up 18,000 to 185,000, but labor market stays tight. Well, that's because the statistics don't count those who have either given up looking for work or have started their own thing under the table, and not reported in the official numbers, quote unquote. Okay, but that's another subject for another day. The bottom line is that the jobless claims are continuing to rise, and the labor market is going to continue to be tight right now because we're not creating new jobs at a faster pace. That's the bottom line. And so you see all these signs. You've been to these places. You go to Walmart, you go to Target, you go to Kohl's, Safeway. All these signs saying help wanted, hiring, now hiring. But when you go there, they're actually just collecting applications for a database. You go there, you put application in. They rarely hire maybe one out of 500 people that come in there and put an application in and all that. And so that's a serious problem for not only the American economy but for the European economy as well. And so both of these factors are going to be a big issue. And now we go to the food shortage. We have a food shortage, and it's continuing. Remember, if you remember 2 years ago at the beginning of the pandemic, there was a lot of these outbreaks in these meat processing factories. Do you remember that? And Tyson's and all these other big meat, Smithfield and all these other big meat processing companies had outbreaks of different things, and it wasn't related to the health crisis scare. Well, now, according to Yahoo.com, Yahoo Finance, bird flu is topping the U.S. egg region where they produce the eggs here. You can see Maryland, Iowa, these are big producers of eggs here, chicken eggs. And now the bird flu is coming back since February 8th. They're saying that the chicken eggs are going to be affected, and so they're going to raise the prices on chickens and everything else. This is going to be crazy. These are staple foods that if you have your own chickens, if you have a half an acre, a quarter of an acre, get chickens, make your own, because, you can have a better chance of surviving things like this. The staples, when the pandemic first hit, the staples were the first to go. As you know, flour, people were stocking up on flour, making water, toilet paper. In terms of food, everything that essential, pasta, tuna, crackers, everything like that was essential was gone first. Soups, peanut butter, stuff like that, honey. Those things are things that if we have an outbreak in either one of these things, whether planned or intentional or not, it's going to create a supply shortage or a backlog of things in other areas. So that's why I encourage you as a prepper to stock up on these things before the storm hits, before there is a situation where the farms are shut down, chicken farms shut down or whatever, and you can't get eggs. So the price of eggs went to a record high, $2.37 a pound on Wednesday. They will continue to go higher, and gas prices will continue to go higher as President Biden announces an emergency waiver on summer ethanol. As you know, we're going to the E15 gas, but technically, as you know, we always switch from the winter blend to the summer blend anyway, and the prices go higher. So what effect is this going to have on the gas prices? Not much. This gas prices will continue to stay elevated above $4 a gallon despite this switch to a 15% ethanol blend, because we are losing out on this war with other countries in terms of production. It's all about manufacturing and production. In the United States, yes, they have reserves. We have all of that. But They denied the Keystone pipeline and the other pipeline, and so we have no way of producing a whole bunch of oil on our own. So when they say 30 million barrels, that's really nothing. That's like 2 months supply or a month supply for the whole country. And so you have to think about that. And they're blaming it all on what they call, the media blames it all, calling the Putin price hike. All this stuff is blamed on Putin and blah, blah, blah. Well, that's not exactly true. Oil prices are set by OPEC, as you know, the Organization of Petroleum Exporting Countries. Saudi Arabia is the chief leader of that, one of the chief stakeholders in that, and so it has nothing to do politically with Putin, and so to speak, in a nutshell. But I don't want to get into that. The political. I'm not a political channel. I'm not an analyst, but I'm telling you that OPEC is the main fuel organization that sets the prices, and they set the price for gas and all of that. So doing this announcement is great. It buys them some time, but come summertime, June, July, August, things are really going to be looking dire in terms of gas prices and in terms of disinflation. So with all that being said, inflation will continue to rise, like I said, to 10%. By the end of summer, we're going to be at 10, 11% inflation. Gas prices will be around 4 or 5 a gallon nationally, higher than that, obviously, in some big markets, California, New York, etc., Illinois. And also, we're going to be looking at continued food shortages and supply chain shortages. So if you need a new washing machine, a new refrigerator, a new, whatever you need, appliances, or either household needs, a new chainsaw, get that stuff now, because next year and going on, these things are going to be not available. Or there's going to be extremely long wait for the majority of Americans, talking about 6 weeks, to 3 months, or 4 or 5 months or more for these materials. So thank you for listening. I look forward to seeing you guys tomorrow for our live face-to-face session with me, Priest to me, and also with everything. Enjoy your day. I'll talk to you very soon. Thank you for listening. God bless.